name is Ashish Kumar. I'm a partner at Bain and Company. And at the firm, I lead a lot of our work with private equity and growth investors. And I'll be moderating the conversation with this absolutely amazing panel. Let me quickly introduce. I know we did a quick round of introductions, but let me do my bit as well. So we have Vineet. Vineet founded Aavishkaar about 2 decades ago, and today, Aavishkaar Group manages about $1 billion and more in assets. He's impacted hundreds of millions of lives across India, Africa, Southeast Asia. He operates at the intersection of impact and returns, and in that spirit, one of the very few people who kind of look at impact investing. We have Imran. Imran co-founded Gaja Capital, and he's grown the firm into India's leading mid-market growth private equity firms. More than $1 billion in assets under management. Imran has built a remarkable portfolio when it comes to education, financial services, SaaS, consumer brands. Welcome, Imran. We have Abhishek as well. Abhishek has over 20 years of experience in the India VC landscape. He was the founding director of India Partners and is now a general partner at K, one of India's pioneering pre-seed investment vehicles. Multiple companies in the portfolio, Porter, Nazara, Zetwork, to name a few. Welcome, Abhishek. We have Ashish, and we were joking before the panel that before we started this, that they picked the 2 most common names, patched them together. That was my parents naming me Ashish Kumar, and that the same happened with him. And then this group decided to put both of us together in the same panel. So welcome Ashish. He's the co-founder and general partner at Fundamentum. He's a serial tech entrepreneur, sits at the boards of many enviable companies, Pharmeasy, Spinny, and many other growth companies. We have Som. You again bring multiple decades of experience. You've been at the Valley, Netgear, Cadence, then you ran analog devices in India before co-founding Bharat Innovation Fund. And you're backing deep tech startups, semiconductor space. Extremely excited to be talking to you all, and thank you so much for making the time. All right, so let's get this started, and maybe Vineet, I'll bring it to you first. Right, you've been deploying capital across different geographies over multiple years. As you think of the map today, right, like where are you seeing the most compelling opportunities? What, in your opinion, is genuinely new to what we're seeing right now versus what's been around forever and it's the same thing in a different flavor, but versus what is truly new things that you're seeing over the last couple of years?
Yeah. Thanks. It's always challenging to talk about new things because there's always something new on the horizon. So if I actually look at what is happening right now, is I think we have exhausted the obvious. And in the last panel, so the last question was moonshot. I think the whole idea that you can actually create efficiencies at scale with what we have has been used. We have used technology to the extent we can. But now there is a need for us to look beyond obvious. Some places, like in artificial intelligence, we probably are a little delayed, but not necessarily out of the game. There may actually be all kinds of play that will take place there. But in the area of climate, in the area of deep tech, within deep tech, space tech is where most of our comfort is. Defense tech probably emerging because of a very large market. Climate, which is again unobvious climate impact, there has been a little bit of move away from carbon towards solutions that will probably keep the world on. Again, there is a geopolitics involved in the whole discussion with the withdrawal of US supports largely on the climate side. Europeans have actually doubled themselves up. So in that sense, in India, there is a clearly emerging, especially from you guys, at least from Ashish, who's sitting in Gurgaon, that there is a serious challenge around climate. But if you go around the coast, and if you actually look at the variability that we are seeing, they will continue to be. So around all these areas, what we are seeing is new kinds of unobvious solution coming in. Of course, nuclear technology, fusion, fission, all areas essentially coming private are great opportunities. We don't know the scale size, we don't know the timelines, we do not know if they are the right investments for venture capital. It is also the time for investors to actually understand what is it that would sell to their timelines and lengths. So there is a huge amount of discussion that's going on in our community also. Do we need to actually restructure ourselves differently? Long-term funds, longer funds. 12% over 20 years is better than 25% over 6 years. I mean, it's far more inexpensive. To my LP also the same thing applies. 12% over 20 years is far better than rolling on 25% in 6 years. So those kind of conversations will continue, but I think it's simply to say that there is a significant amount of new thinking that is going in structurally, and a huge amount is because of one person who's actually changing the world on a daily basis. So the volatility is so high today that we cannot really believe the truth of today is the truth of tomorrow as well, which I think probably worries each one of us, has also those side on the other side.
Yeah, no, absolutely. I think you touched upon two themes, right? Like, and again, many themes, but if I were to forcefully classify them into two, one is this entire deep tech theme. The another, you touched upon AI as well a little bit. So let me bring it to you on the deep tech side, right? Like, to Vineet's point, these are capital intensive businesses. These are going to take a lot of time to just, to get out of the gestation period before they start showing numbers, right? How do you invest in businesses like that? Like, and how do you guys as investors think about them differently than other types of companies that have been invested in previously?
Sure. Can you guys hear me? Okay. Yeah. So again, the lens that we look at is in deep tech is an overused word as well, right? So we kind of classify things maybe on one extreme, it's deep science, right? Coming out of real core years of research from the universities, research labs, and so forth, right? And we have made like 4 or 5 investments out there. The second group is kind of hardware tech, right? So that comes semiconductor, robotics, space tech comes under that piece. That is more of an engineering core implementation affordability story. And you can get things done probably in the 3 to 5 years kind of a landscape. The other piece, which is of course advanced software and AI, that is the piece that is moving the fastest. Now you can literally create software out of the fly, right? Using Claude and other cores. And those pieces are actually changing pretty fast. So the take that we have taken essentially is, hey, so in our current portfolio of 16 deep tech startups, we have probably taken bets in 4 of them in deep science, including areas like molecular computing, new kind of polymer materials and so forth. We've taken a couple of bets in hardware tech. Probably 50 to 60% of our bets are kind of AI, advanced software and AI, which kind of scales much faster. So that's the way we are kind of doing the addressing of the bets. But that too, very clear on the deep science stuff, at what point do you come in becomes extremely important. At what TRL level? We are very clear we are not funding research. It needs to be a bit of a demonstrable, some results, maybe on the biotech side, some amount of animal testing and so forth, before investors like, even early stage investors like us, we jump in.
No, that's a very interesting point. And I think the second one that I wanted to touch upon was AI, right? And that's a question to all 3 of you actually, and maybe Abhishek, we start with you on the early stage, right? There's a lot of work that's happening on the AI side right now. Now, how do you differentiate companies that are truly, genuinely doing something with AI versus a lot of companies that are using AI as just like a whitewash, right? Like, can you is AI really critical to the business? If you rip AI out of it, will the business cease to exist, or it's just incrementally better than when AI was not getting used, right? How do you differentiate those two kinds of companies?
Yeah, no, thanks, Ashish. And as I think you and most of folks would know, we are more like a state specialist. We call ourselves more like a state specialist, not so much a sector specialist, right? So, in short, I would say, let's call out the elephant in the room. AI is a beast that nobody understands. It's very new, okay? I think the pace of change is even more scary. I'm sure most of us would have read, blogs by Chamat, etc., where the terminal value itself is being questioned, that it's hard to estimate a terminal value because the lives has shrunk from 10 years to 5 years, right? Now, coming specifically to your point, I think somewhere in your question you had, a bit of clue left for the answers as well. You're absolutely right. I think the way we look at it, again, AI have different spiels, right? There is a foundational side, there is an infrastructure side slash middleware, there is an application side. Then there are a lot of AI enablers from an infrastructure hardware side, compute, etc., etc. We believe fundamentally that on one side, of course, there is a whole demand getting carved out. On the second side, there is a talent that we believe are rightly skilled to solve a certain problem. And the third is the ecosystem, right? For me, I don't want to challenge. Obviously, it's always possible that the next LLM, with all the vernacular capabilities emerge or come out of India. But it is hard to imagine today because it's not about the funding or talent alone. It's about the ecosystem as well, right? It's a different character, different nature that kind of gives birth as well as nurtures that kind of a beast. Now, where we have seen rightly a bit of a right to win play out, and it becomes even more critical for AI B2Bs because there's a right to win for founders, there's a right to win for us. The best of the best AI B2Bs is already sitting in the valley, raising from A16Z benchmark capitals of the world. So there's a very strong question that we not only ask founders, we ask us, what is the strategic right for this company to be built out of India? Or even if the founders are from India, what's the strategic India angle to it and investors like us to it, right? Coming to the core area side, I think, if you look at our traditional, of course, experience has been hovering around services. Obviously, we believe there's an ample opportunity in plethora of pockets when it comes to AI services, be it legal, be it compliance. We have, for example, invested in a company called BPR Hub, which is AI compliance services for manufacturing, right? Mid-market manufacturing. These are guys who are founding sales guys of Scrut, came out and started this. Likewise, we've done something on the marketing services side. They have a very uncanny ability to understand the services playbook, but at the same time, I think how to blend this in with the new technology, that's one side. The second is AI applications, where we still believe there's a very interesting domain, know-how, and certain areas which have capabilities to produce large businesses coming out of India and eventually go global, right? Third is the whole consumer AI side, where we have a very clear yardstick that there's a very strong right to win, because the nuances of how to build and why to build for a consumer with 300 odd dialects, multitudes of languages, right? Their own purchasing power, accesses, distribution can only be met by founders who understand the nuances around. So that's the whole consumer AI side. We have taken few bets, whether it's AI companion on the wellness side, talent side, etc., etc. So these are just to kind of just scratch the surface.
Got it. And Ashish, if I bring the same question to you, right? What's your take on that? And then Imran, I'll come to you with the same one as well.
Yeah, Ashish, maybe before that, I just want to confess one thing, right? So, I have been rarely in a group where there have not been two Ashishes. I have been multiple times in a group where there have been two Ashish Kumars. This is the first time I'm on a panel where there have been two Ashish Kumars, right? So, it's a little interesting one. See, on the AI question, we come in typically at a Series B landscape, right? So, what we have observed is that if you look at every subsequent technology creates polarization in value creation, which means that the big companies will become bigger, and the small companies may not necessarily, the smaller companies may not necessarily generate the type of venture returns that we want to do. One of the characteristics of the companies which become bigger in the newer technologies like AI and all is that they start behaving almost like an infrastructure, right? So they may start off as like an application, but if they cannot go towards almost behaving like an infrastructure, and infrastructure does not mean foundational models only, right? It could also mean like a term that people use quite a bit is that, am I an operating system for healthcare? Am I an operating system for manufacturing? Am I an operating system for XYZ and so on and so forth, right? And then the way that you would think about from a technology and AI perspective is that, can I effectively move everything that the company does on AI, right? And not only on the cost side, and on the revenue side. So those are the companies that we would typically look at. So one company that we have invested in, which actually applies AI on material science quite a bit, right? And they started off as a business which from the outside looks like a B2B trading, but the moment you go deeper into that, you would understand that they're using AI very meaningfully to understand what materials, what blending should happen in what geography. So, to give you an example, let's say if you look at large scale road constructions today, right? I think everyone will use some sort of a geotextile, and the material that you could use in a Srinagar or a Bangalore or a Delhi or some other city will always be slightly different, right? And this is where AI comes into play. So some of those companies, and if you think about from a technology perspective, these will at one point of time will start almost behaving like an infrastructure for thinking and creating a material science or a new material, right? So that's how we think about AI. That's one. The other thing that is starting to happen, especially in India, and like what Abhishek was talking about, that what is the India advantage that we have, is that we are in a very interesting times, right, where AI, world is almost the entire supply chain is being rewired because of the AI. At the same time, the volatility is very high, so the companies have to think bigger. Sovereignty comes into play, right, which means that a lot of these companies which were hardware only or the companies which were software only, now people are saying that can I combine the two, right, and effectively create some sort of a model, some sort of a company which people kind of in a more local language kind of call it as physical AI. Whether you look at robotics, whether you look at drones, right? I mean, robotics and drones have been around for now. I remember like 20 years back when I was in college, I think we used to do robotics and we used to drones as well. The challenge was that these were more heuristics based. You give them instructions and so on and so forth, right? Now, you could kind of apply AI model on top of that. Similarly, semiconductors, if you look at it, there are now application specific semiconductors where you're saying that can I create a chip where I could kind of load AI model on the chip on the edge, right? So these are some of the companies that are starting to be created, which where we think that it has an India advantage. So that's what we would typically look at.
No, absolutely makes a ton of sense, Ashish. And Imran, if I ask you the same question, right, and I think just one other layer to it, one is what is like a truly AI company versus an AI whitewashed company, but also if it's a truly AI native company, then what's the right of it to be built in India versus in the Valley, right? Like how do you think about that?
Yeah, so see, first of all, we invest at the growth stage. So we're really looking for, scale-ups, companies that are, have crossed the chasm of startups, roughly $10-20 million in revenue, and we help them scale 10x from that level. So in many ways, we're looking really to the early stage, investors as a supply chain for ideas for us. So I think we have some luxury, but I must, and I'll come to your question, but I must say that while we've kept the aperture constant over the last 20 years of looking for growth stage companies, it used to seem like we were earlier watching sailboats at the horizon, and now it's like a lot of speedboats. So I must admit that, yeah, so like between 23 and 26, like the world has changed in AI, right? So from being curious to it being very real. So there's a lot of fake AI. But I'll tell you what we've done. We invested in Fractal Analytics, which went public. This was in our view, the picks and shovels at the growth stage to participate in the AI wave. The AI wave is very real. It is true that if you are an AI first startup in the Valley, the probability of getting funded and getting funded earlier and at scale is much higher than if you were in India. But India always operates with a lag. And what used to take, let's say in the SaaS world, a 5 to 6 year lag has become a 2-year lag. I'm already, in fact, this morning, I started my day today with 2 breakfast, back-to-back meetings in the morning with, earlier stage founders. And I was blown away by, the convergence of how people in the Valley think and how people in Bangalore, and India think. I don't think there's much of a difference. And now with AI, that is going to get, that convergence would happen, much more sharply. But to give you a sense of where the rubber hits the road for a growth stage investor like us, Out of roughly 12,000 startups, we have about 2,300 startups in our active coverage. And intelligent software and automation, which is our catch-all phrase to describe deep tech, AI, software, etc., is roughly 1 out of 3 companies now. If you'd asked me this question in 2019, this would have been less than 5%. So clearly our coverage is reflecting a large number of high-quality assets that are, let's say, 12 to 18 months away from a Series B, Series C round. We're very excited about it. In fact, we think Fund 5, we will allocate, 25%, 30%, to intelligent software and automation.
Can I add one more comment, quick? So picking up that piece, right? What gives the right of an Indian AI startup to be successful, competing globally? So we recently did a very deep, thorough understanding, looked at 8,000 plus AI startups, narrowed down on 600, 700 of them, right? Went deep. So couple of very interesting pieces you're going to find, right? I just want to bring out one point. See, unlike the West, unlike the Valley, we don't have the luxury of capital or GPU resources. So if you look at even AI research that's going on out in India, if you look at the plethora of AI application startups or middleware, model optimization, compute optimization is coming out as a key. So if you look at any application startup, right, comparable application startup that is getting built in legal, HR, manufacturing, procurement, what we are seeing, because we don't have the luxury of resources, right, we are breaking down an enterprise application into multiple subtasks, right, even micro tasks. For each micro task we are seeing, if we really need to use an LLM, burn out sockets, right, burn out tokens, or can we do with a local LLM, a local SLM, small language model? And we are orchestrating this flow piece together, guardrailing. It's almost like the software engineering. Yes, in a few places, we are using SLMs. Few areas where SLMs are unable to do the job, you are calling up an LLM. That's how India is building. So at day one, what we are finding is the cost structure of an enterprise app is at least 1 order of magnitude lower. I think this is where India will excel.
So very interesting, very interesting. I wanted to also kind of, we've spoken about the spaces. I also wanted to put the focus a little bit on the entrepreneurs themselves, right? As you guys think about, founders, meet them, fund them, invest in them. If you were to give, advice to, the budding entrepreneurs of today, right? What do you really, what separates a great entrepreneur from, someone who's just come with a pitch deck and, trying to do something, but, hasn't really demonstrated the ability to kind of, build it truly, right? Like, what do you truly look for in an entrepreneur in today's day and age, right? And also, because we've had this conversation on AI, deep tech, et cetera, right? In a world which is changing at the pace at which it is changing, right? Like, how is that skill set almost evolved, right? Like, maybe, with the same skill set 10 years ago, founder could have been really successful, but now the day and age of today actually demands something really, really different.
Yeah, so see, I think one thing that I've learned is that, as an entrepreneur, the real value creation, because for a company which has decided to take venture capital, is that you need to create a value in, let's say, 7, 8, 10 years, like enough for it to make sense to the investors, right? And a lot of times, or most of the time, the value will happen at the intersection of two disciplines which people have not necessarily blended or wedded, prior to that. And so I'll give you examples. So as an example, so I in the previous comment, I was talking about a blending of hardware and software. The hardware and software blending never used to happen maybe until, in a meaningful way, until maybe 2 years, 3 years back or so, right? So that's one area that I always tell entrepreneurs, that when you are looking at a problem, look at disciplines which, have not been blended meaningfully in the last maybe 8 years, 10 years, because that is where you will be able to differentiate. The second thing that I tell them is that, see, building has become easier, at least on the software layer only, right? And very likely only, again, if you look at hardware, if you look at chemistry, if you look at any of the disciplines, There are a lot of researchers in the world who are trying to sort of solve that problem a lot more meaningfully. And you will not be able to compete with those researchers. You should not be able to you should not be competing with those researchers. But figure out where is the research, right? Where again I could understand that domain very, very well, and then be able to kind of go back to the first point that I made, that which are the two disciplines which I could blend and then kind of create value, right? So the times of feature companies, right? And there is a word that people use that, I will create a wrapper on top of some of the work that some of the foundational model, like people have done. I think don't think like that. You have to go a lot more deeper into the domain, understand it, and think almost full stack in probably all areas of building the business.
Shall I?
Go for it.
So, because we invest slightly at the later stage, see two specific suggestions for founders at wherever stages you are. The first is, I know most of you will be really passionate about building something. That's the biggest motivation. But at some point, take some mindful time and meet public market investors specifically. Okay, even if you don't meet private equity guys. Meet the hard-nosed public market guys. They will start and end the conversation with earnings per share, return on equity, understand what that means, bring it into your world, into your vision, visualize it like an athlete would visualize what it takes to win an Olympic race, right? So that's the first thing. The second is the age of software and tech being adopted by customers as expert tenured professors are over. Now the pricing is already moved to usage. In some cases, it's moved to outcomes. If you cannot demonstrate in a very simple way that your piece of software, your product is not delivering customer value, that you can explain to a time-harassed CFO, you don't have a business. So I would give these two very, in my view, important suggestions. I was talking to someone in the morning, and I said, look, whatever it is you're building, he was talking about sales, efficiency, etc. I said, if you can't demonstrate that you can improve the conversion rates and improve the ARPA, don't even bother, right? Because everyone is harassed right now, and the shiny object of AI or tech is no longer valuable.
On a lighter note, if more entrepreneurs start following Imran's advice, I think there will be far fewer startups, I guess.
Vineet? Yeah.
So, I know I'm in Bangalore, but there is a whole host of business outside software also. So, I think two things before they go to the public markets. Just understand that assumption if you are able to raise capital, you have a good idea, and most likely you are able to articulate that idea well to be able to attract capital. The next thing you as a leader have to do is find talent, attract talent, and retain talent, and that requires institution building. So a great idea is a starting point, but the institution is a very critical point. So if you cannot attract good talent and you cannot retain them, chances of you actually achieving your potential is very low. So that's a critical and important part. And second part, which I think 99% of the entrepreneur will ignore, is to start to prepare to meet the public sector or the public markets investor. You need to actually build governance. Because unless you build a governance, those questions will not come to you. And if you meet a public investor, you would probably not even understand what they are saying. So think about two things. India has a serious challenge coming on governance side. And if governance continues to falter, our ability to attract global capital will continue to be questionable. And remember, a significant amount of local capital, Indian capital, is coming from the government. They will have serious challenge in case governance continue to be a challenge across our investment. So those are two critical things to think about, not just to make the pitch deck, but after what the pitch deck does. Anyway, AI makes very good pitch decks. So that's one these days.
And Abhishek, as you answer that, Abhishek, just also, Vineet touched upon a very important point on the ability to attract good people, great people, right? Like you cannot build the company yourselves, right? So what do you tell founders, right? Like, or what do you even, like, what do you look for in founders who are able to attract people who are A+, right? And what do you tell your founders who are not able to attract that kind of talent pool yet? How do they build that muscle to be able to, gather the best people around them?
Yeah, I'll come to that very quickly, Ashish, but I have to kind of also take a step back because the stage that we come in, founder is our only bet. To be very honest, at least for us, and I'm sure the team matters to almost all of us over here. But we don't have an option. That's the only tangible thing we have to literally evaluate the opportunity on. I think, very interesting thing. So I think I mostly agree with all the traits that's been brought out. The way we have started looking at, and I think the sample set or the subset of the AI first entrepreneurs is still less, but it's starkly different, okay, versus the traditional sort of businesses or the founders who are building in the traditional businesses. There is domain know-how. I think there is ability to sort of, you being seen some operational cycles, you would have probably first-hand met or encountered the problem, experienced the problem, because that's when the passion, comes out extremely, lively and very, very kicking. And I think that completely, stands and hold. Interestingly, on the AI first, we have not yet been able to strike a pattern, okay? There are two sets that we see very often. One are the set of researchers who have been there only researching throughout their career, and suddenly they come out because they believe this is the time for them, for the massive research that they have been doing to put in application, right? And this is the world which now understands that. The second are the restless folks, very young entrepreneurs. If you look at their trajectory, they don't stay stable in any organization for more than 2 years. Like they'll spend 1.5, 2 years, etc. And they have the knack to constantly recalibrate sort of their own journey and what's the big thing really, that they're working on. So, and this kind of also stands true, very candidly speaking, in the nature of opportunity that we are seeing. I think the AI first completely goes there, and the non-AI goes, in a very, very still conventional and traditional bracket. The way we do our diligence, like I was mentioning, it is heavily laid on founder, and which is where a lot of these things, unfortunately, either comes through their past experience, referrals, back channels. We don't have, the crystal ball to gaze through or have witnessed their journey for 2-3 years. And therefore, the ability, of course, to build a team, to build a very strong L1 team. How do you ensure that you are one of those people who are who is not insecure to bring a smarter person in the room, who's more smarter than you, right? But at the same time, typical AI native companies, I mean, I can talk about one of our companies, they've raised $1 million. They are $10 million ARR plus, right? Extremely capital efficient. And these are just young kids, single founders. They have completely flipped over some of the scheme of the things that's been prevalent, right? So again, I say this with a lot of caution that the data set is not huge, but that's one thing.
So what about you? Like, same question.
So again, depends on if it's deep science. These guys are usually coming out from the research labs and so forth, right? Hardcore technical founder. We cannot expect them to immediately transform themselves into a CEO, right? So typically what we have done, and I think that is working out beautifully, is we immediately ensure that a chief business officer or somebody business-centric role is either getting hired before our investment or right after, right? And in fact, we do the search and so forth. For example, this molecular computing company we were talking about, we made sure we hired a chief business officer in the valley, right, for this company. In case of AI, right, so we are again, Abhishek bringing up a very good point. We are seeing that kind of very young crowd, right? Exceptional amount of energy, Gen AI first kind of a native guys. And frankly speaking, they are building at a speed which is incomprehensible, right? So even a 5-member team, 10-member team getting to be a $500,000, $1 million revenue as well. So in terms of their team build up and so forth, frankly speaking, they don't need that 50, 60 member team, right? This is point number one. The second, on the application domain side, I think we are seeing, or the way we are looking at things is, hey, an AI expert and a domain expert kind of coming together, right? Yeah.
Very interesting. I can go endlessly into the evening and keep talking to you, but we have about a minute left. Last question that I wanted to ask you all is, what excites you the most about, like if you were to pick like one thing in the, and it can be a space, it can be, the quality of founders, like what keeps you excited about venture capital investments in today's day and age? And maybe Vineet, we start with you and then come around this way.
My personal theory is a country starts becoming successful when the capital of that country starts getting invested in this country. I've never seen foreign capital actually creating successes. So you have to find local capital, and with the quantum of government capital and quantum of private capital from India that is moving into venture capital space, that's very exciting. For at least next decade, we are taken care of, but at least in that decade, we'll have to deliver. The last decade, we have proved following things. India was always large, India was a market, but we proved that exits are possible, that Indian entrepreneurs can build scale. IPO actually is not just we will pray to God, but it actually happens. If you would have made all tech IPOs portfolio equal separation, your current returns would have been absolute return minus 9%, and portfolio IRR would be minus 3%. We need to correct that and show that in the public markets also we can deliver 20, 25, 30%. So those are 2-3 things that we need to keep in mind. Next decade, we have to keep proving that. But first part is done. Local capital will probably give you a much longer rope, like it gave the IPO market. I mean, it's the local capital that's holding us. Had we been dependent on foreign capital, we would have been dead and buried by now.
I would say that India has a massive scale-up problem, which is also India's biggest opportunity over the next decade. We have some superb talent at the earlier stages, great founders, great investors. Many of my colleagues here, have mastered that art. And we've got vibrant exit markets, IPO, M&A, buyouts, all firing. But we've got in the middle a chasm that statistically very few startups are able to cross from startup to scale up, right? And if you compare it to the US ecosystem, etc., the comparisons are fairly stark. So for us in the next decade, because we focus on this part of the market, we think the biggest opportunity is India's mid-market. India's mid-market now, if I just give you broad statistics, India's private equity and venture capital is roughly $33 billion a year, right? 1/4 of that would be, mid-market. And if you look at growth investing and buyout investing, mid-market companies account for 2/3 of both. So the market exists. We think we need more specialized investors to focus on that. And also, I think we need a greater appreciation at the earlier stages of what it takes to, meet the criteria of that stage, so that we can have outsized outcomes in public markets and so on, which are then more visible to the world, and that will attract scale capital to the country.
Yeah.
I'll give a very short,
20
lame answer.
each, okay?
I think it's the glimpse into the future, honestly, the wild range of ideas, glimpse into the future. And the satisfaction of even one of those glimpses landing into realities, like last week when I used Porter, I really, saw as a customer, it has value. So I think that's what essentially it boils down to.
Category creation and kind of reimagining industries is something that I love, entrepreneurs with kind of unbridled ambitions too. So I've saved 10 seconds for you.
So I think, when we originally kind of started up the deep tech piece way back in 2018, I think what we are seeing is just the sheer number of deep tech and AI startups, right, that has come in. We did not have capital back then. Now with RDI fund and so forth, at least the early stage capital piece, and we have to show a few good, solid success stories, right? But I'm impressed by the quality of innovation that's kind of starting up. Again, we need to scale them, we have to make them successful, but there's no dearth of good quality innovation that's happening out of India.
Gentlemen, this has been an absolute pleasure. Thank you so very much. Like I said, I could have talked to you through the evening, but they're throwing us out on the stage now. So thank you so much.